For the longest time, whenever my team and I were working with a client to help them purchase a new home, that client would take a 5-year fixed rate mortgage. Historically, these were always the easiest mortgages to qualify for. And let's face it, Canadians are generally pretty risk adverse. But recently, when mortgage rates started to rise, Canadians began opting into even riskier variable rate mortgages. And unfortunately, the reason they did this is they were hoping that they would have a lower payment. And that's because historically, over the last 35 years or so, we have lived in a period of time where mortgage rates tended to only go down. This gave so many Canadian homeowners the false sense of security that rates would stay low forever. And now, even though the Bank of Canada came out and said that they would keep interest rates record low until the end of 2023, surging inflation has made Tiff and company reverse course a year and a half early. And now you're finding yourself in a very tough spot because you took their advice and bought a property within the last year. And I'm going to talk about that and more in today's video. But first, and as always, if you would like to stay up to date on the Surrey and Fraser Valley marketplace, please go ahead and subscribe to the channel. And if you're struggling because you don't quite know what to do with your next mortgage renewal, stick around until later in the video because today's sponsor, Citywide Mortgage Services, may be able to help. But more on that in a minute because I've got some like button clicking to ask for. Yes, that is the best way you can help me get this information out to other people who are also worried about their mortgage rates. So thank you for clicking the like button, and now onto the video. So for the longest time, mortgage rates had some pretty easy rules of thumb. Almost everybody went for a 5-year fixed payment. I've been licensed since 2008, and almost every single one of my clients since I first got in the business has chose to lock in for a 5-year fixed rate because, well, why not? It locks you in, gives you security, and you've now got the safety, just in case. After all, locking in gives you security of knowing exactly what your payment is going to be for the period of time of which you secure that rate for. Meaning that at that time, all you had to do was continue to pay your bills and everything would be just fine. But with that locked in rate, along comes penalties should you decide that you want to make a move before the end of your term. Because a fixed rate is an agreement to pay the bank a certain amount of interest over a certain period of time. So if you choose to break that agreement, the bank still wants their interest. And something like 60% of 5-year fixed rate mortgages in Canada don't see the end of their term. And that means 3 out of 5 of those people that took a fixed rate are likely going to see a very large penalty just because you needed a little bit more space for a podcasting studio and gym. It's pretty sick though, right? Well, don't worry. There are other options for people like you, and that would be to secure a variable rate mortgage. Variable rate mortgages don't promise a certain amount of interest to the bank, so they come with much smaller penalties. And if you're going to break a variable rate mortgage, you're likely only going to pay 3 months worth of interest. But the other thing you get is generally a much lower interest rate than if you picked up that pesky 5-year fixed rate. Historically, you likely would have saved upwards of a full % or more if you picked the variable rate because you're taking on the risk. Generally speaking, the person that picks the variable rate mortgage does end up benefiting from that financially over time because, well, you're likely going to have a lower payment over the period of time, and 60% of you are not at risk when you do decide to either refinance or maybe make a move. Well, that's the way it was until now. You see, rates are rising now almost as fast as they did way back in 1981 and 82. Back then, house prices rose 40% in just a year and then immediately dropped that same 40% the following year. And that has everyone who took a variable rate within the last, let's call it 12 months, in tough because of market conditions that we've never seen before. Although they do look a whole lot like the early 80s. But speaking of mortgages, that brings us to today's sponsor, Citywide Mortgage Services. Let's face it, most of you out there, just like I did the first time I got a mortgage, walk into your local bank and just do an application with them because a mortgage is a mortgage, right? And all lenders must be exactly the same. So all that should really matter to you is the lowest rate. Well, let me tell you from experience, that is simply just not the case. The folks over at Citywide Mortgage Services are independent mortgage brokers. That means they have the tools to shop around on your behalf to find you not only the best rate, but also a mortgage that has the best terms for you and your situation. And I'm not just saying this because Citywide is sponsoring this video. Nope, they are actually my personal mortgage company. And at one point they helped me switch from a TD mortgage that I thought was pretty good at the time to a Manulife One mortgage, which personally fits my needs a whole lot better. Because that particular product works really well for me now that I have a whole lot more experience in the real estate world. I'm a little bit older, and yeah, I'm willing to take on just a little bit more risk. And recently, Citywide even helped me secure what I think is a fantastic Scotiabank mortgage for my investment property. They helped me identify that that particular bank was the right move for me on that particular property, and well, I'm super happy with it. So if you're looking for a mortgage and really have no idea exactly where to turn, click on the link down below this video and start your application with Citywide Mortgage Services today. Remember, if it's a big bank mortgage that you're in search of, or if you're looking for non-bank lenders, the folks over at Citywide can help not only with your purchase, but also any refinance or restructuring that you're hoping to do. So go ahead, click the link right now down below in the description to start the process and start getting really good mortgage advice right now. Who knows, your future purchase could be closer than you think. And now, back to the video. With all of these crazy market fluctuations happening and interest rate fluctuations right along with them, something really strange has happened for the first time in my career. Both variable and fixed rates are almost identical. As of recording this video, my personal mortgage broker, by the way, who is at Citywide Mortgage Services, is able to secure a 5-year variable rate mortgage at 4.55% if that mortgage is insured by CMHC. And at the exact same time, a 5-year fixed rate mortgage is 4.59. For non-insured mortgages, well, variable is currently sitting right around 5%. And that 5-year fixed rate at 5.25%. And this is the part where you watching this to get advice about mortgages are about to outsmart yourself. You see, now that variable and fixed rates are so close to each other, obviously the smart choice is to take the 5-year fixed money and not be at risk of your payments going up the next time the Bank of Canada has a meeting. But that doesn't seem to be what's happening. In fact, there's a very good chance that the comments down below this video are going to start saying things like,
"Why would I lock in now? Chances of rates continuing to go up are virtually zero. And I heard that the Bank of Canada might even lower rates by early 2023.
You see, there's a very good chance right now the fear of missing out on future lower rates will have many people continuing to gamble on variable rates right now in hopes of a lower payment, not within the next 6 months, but maybe in 3 years, when everything today economically continues to point towards only higher rates and therefore higher payments. So what do? Well, I think what you should do is get advice from an independent mortgage broker and then cross-reference that with your own personal risk tolerance. Personally, I'm a fixed rate guy. My belief is that most people are in a position to not want to sit and think about every single time the Bank of Canada holds a press conference and then worrying about either their payments going up or their amortization being extended into infinity. So if you're a normal person just thinking about keeping that roof over your kid's head, personally right now, I say lock in and sleep easy at night. Just don't plan to move in the coming 5 years. But at the exact same time, let me do a very good job of doing what every real estate agent should be good at, which is immediately talking out of the other side of my mouth, because in 2018, I personally took a variable rate mortgage with a small fixed portion as well. That variable rate currently sits at 5.95%, which by today's standards totally sucks. My fixed portion is still way down at 2.79. But let me tell you, the HELOC portion of that mortgage that I took on the variable rate was the best thing I personally ever did for my financial future. Being able to pay down my mortgage as fast as I possibly could with zero penalties, and then having the ability to not make a payment if I didn't have any checks coming in that month, well, that helped me save more interest than I ever thought possible, even if I had taken out the entire mortgage on that much lower interest rate. Now, the reason for that is things like HELOCs and readvanceable mortgages are great for someone like me who works 100% off of commission. They could be good for you if you have large bonuses as part of your income, or maybe if you're expecting an inheritance in the next couple of years. The flexibility of that mortgage helped me grow my wealth with no strings attached. So if you're a more seasoned homeowner or investor, well, that might be the right product for you. But let me tell you, those people are very few and far between. So if you're a first-time buyer, or if you're on a steady salary, maybe you're in a union position, I say right now might be one of the best times to lock in that we've seen, comparable to variable rates, in a very long time. Thanks so much for watching. If you're looking for a mortgage, click the citywide link down below in the description and start your mortgage application today. Please check out another video before you go. Remember to subscribe, click the like button, and we'll see you in a couple of days.